Okay. Next is TYU1. Okay.
Mm-hmm.
So TYU1, you are asked to find using the indirect method of presentation. Prepare the net cash flow from operating activities, extract of cash flows for the year ended 30th September 2008. Okay.
Mm-hmm.
Okay. There's a correction. This is indirect method, all right. Sorry. Using direct method, and this question TYU1 is supposed to be indirect. I think it's supposed to be direct. It's just a typo. All right.
It's direct, right?
Yeah, it is direct itself. And how do you know if something is direct? See, for direct, you will be given the cash payments and receipts. See, the receivables,
Mm-hmm.
the payables, the wages. Clear? So it is direct itself. Understood? So using indirect method of presentation, prepare net cash flow from operating activities, extract of CFS for the year ended 30th September 2008. Okay. So first
Mm-hmm.
things first, you have been given the receivables account. You have been given an extract of SOPL here, right?
Mm-hmm.
Clear. So from this, you're going to find out how much is receivables that we have got in cash, how much is payables that we have paid in cash. Clear. So all of these things would be taken from here. Okay. So first things first, you're going to open the receivables account. You have been given 2007 2008 balance, right? So this
Mm-hmm.
side it is the opening balance, right? And this
Mm-hmm.
side it is the closing balance. Understood?
Mm-hmm.
So receivables opening balance is 35633, right? That is right written over here. Okay. And
Mm-hmm.
receivables closing balance, we have a twist here. The twist is there is a contra entry of 230 in the receivables. Understood?
Mm-hmm.
Okay. So contra means it would be there in receivables as well as it would be there in payables. Understood? No?
Mm-hmm.
Okay. Now, the moment of confusion, whether or not to take this off from the closing balance. See, the thing is simple. If you have a contra entry, the cash flow, that is the receivable closing balance, that is the 2008 balance that is given here, would probably be adjusted of 230, right? You have to adjust it. That is the thing. Clear?
Mm-hmm.
And especially now, because it is on 30th September, they found out that there has been a contra entry. Understood? No?
Mm-hmm.
So that means this 31250 does not have the adjusted contra. Okay? So you're going
Mm-hmm.
to adjust it. Understood? No?
Mm-hmm.
So 31250 minus 230. Okay.
Mm-hmm. Mm-hmm.
And then the usual. The contra is all usually taken on credit side of receivables and debit side of payables, right? So you're going to take both like this. Clear, no?
Mm-hmm.
Okay. Now you have got the sales here. You're going to assume that whole thing is credit sales. Understood? So you have taken that here as well. Okay. Now the usual thing. You're going to total them together. Total both sides. Big total minus small total would give you the cash receipts of current year. Understood? No?
Mm-hmm.
Okay. So
Mm-hmm.
you're going to mention that here. Net receipts from customers is this much. Clear?
Mm-hmm.
Okay. Now on to the payables account. So in the payables account also, you have been given the opening balance and the closing balance, right? So
Mm-hmm.
opening balance is 13,750. Closing balance is 14,195. But they have not adjusted the contra. So you're going to adjust the contra and take the balance. Clear now?
Mm-hmm.
And then you're going to show the contra. Contra is something that reduces payables and receivables account. So if the payables are going to reduce, it is on the debit side. Understood? So 230 here. Clear?
Mm-hmm.
Now, you're going to assume that all the purchases are credit purchase. Okay, so purchases and cost is 165,000. Clear? Same thing here.
Mm-hmm.
Understood? Now you're going to total both of the columns together. Okay, and the balancing figure is the payment that you made during the year. Clear? No?
Mhm.
Okay, so that is equal to minus of this amount. Understood?
Mhm.
Okay. Same
Mhm.
way, now you're going to take the wages and expenses account. Wages and expenses. Clear?
Mhm.
And they have given you accrued. Accrued means it is not yet paid, right? So the
Mhm.
opening accrued would always go on the credit side in the assumption that you're going to set it off this year. Clear? That is, you're going to bring down the expenses. Clear?
Mhm.
Okay. And in the COS, you have got 52750. That is in the wages section, right? You're going to take it in the SOPL. Clear?
Mhm.
Okay, now
Mhm.
under COS, there will be wages and salaries. So you're going to take that here. Okay. And the balance carried forward also, you're going to take it here instead of bank. You're going to assume that you're going to accrue it for the next year, 1015. Clear now?
Mhm.
Simple thing, you're going to total each of the columns. Small, big total minus small total would give you how much of the wages and expenses that you have paid during the current year. Clear now?
Mhm.
Understood?
Yeah.
Okay. Now you're going to take the same and drop it here. Format is always the same for all the direct methods. Understood?
Mhm.
Okay. And when you study direct method also, the format is going to remain same throughout.
Mhm.
Okay. Now, the
Mhm.
additional thing there is that the interest payable and the income tax payable. Understood?
Mhm.
Okay. So as you have prepared all of these accounts, you're going to prepare interest paid and in tax paid. Clear?
Mhm.
Okay. So until this section, what you get is cash flow from cash generated from operations. Understood? Until
Mhm.
that section, it is called as cash generated from operations. Understood? Okay.
Mhm.
This is cash flow generated from operations. And unto that, you're going to deduct interest paid, you're going to deduct tax paid, and then what you get is net cash flow from operating activities. This is generated from operations. This is net cash flow from operating activities. Okay. Study the
Mhm.
format as it is. Clear?
Mhm.
Okay. Now we know that the payables interest opening balance is this, closing balance is this, and the SOPL charge was this one, right? But we don't know how much we paid, right?
Mhm.
Understood, no? So you're going
Mhm.
to prepare interest payable account, okay? And here, okay. So in the interest payable account, we have been given the opening balance and the closing balance, right?
Mhm.
Okay. So 300 here and 350 here. Clear?
Mhm.
Payable means it is accrued, but you have not paid. So this becomes a liability account. Understood the logic? Usually, interest and taxes are expenses, right?
Mhm.
So what is the problem here? The problem is that it has been accrued. So that makes it a payable. Understood? No?
Mhm.
So if something is accrued, that makes it a payable. Understood?
Mhm.
Clear? Okay. So
Mhm.
350 here. So whatever increases it would go on the credit side, whatever decreases would go on the debit side. Usual logic of liabilities, right? So
Mhm.
expenses during the year amounted to 325. So 325 has been increased. Clear? Now you're going to do the usual thing.
Mhm.
Total both of the columns together and big total minus small total would give you how much of the interest was paid by bank in the current year. Clear? What
Mhm.
for bank? Same. Okay. Cash flow is same as what you go from bank, right? Now you're going
Mhm.
to open tax payables account. Okay. And they have given you the opening balance, the closing balance. You're going to take it either side. Understood? And in the SOPL, they have given you additional tax charge. You're going to take this here as well because it increases the tax payables, right? Now you're
Mhm.
going to total both of the columns together. big total minus small total would give you the bank payment of tax current year. Clear?
Mm-hmm.
And here you're going to take minus of this amount because it is payment, and here also minus of this amount because it is payments. Clear, no?
Mm-hmm.
Understood?
Mm-hmm.
Now you're going to total the cash flow generated from operations minus interest paid minus tax paid, and what you get is net cash flow from operating activities. Clear, no? Understood?
Mm-hmm.
So remember always for direct method, the format would be like this. That means the question format would be like this. You would be given a list of receivables, payables, wages, etc., and you would be
Mm-hmm.
given an SOPL extract. Clear? So when as
Mm-hmm.
soon as you view it like this, it becomes the direct method. Clear?
Mm-hmm.
That means
Mm-hmm.
all the payments and receipts you're taking away from the ledger accounts itself. Clear? That is why you are
Uh-huh.
preparing ledger, right?
Mm-hmm. It's
Yeah.
always should be 2 year period, like
Yeah, yeah. Yeah. For
2007.
cash flows, always it would be two periods because you're comparing opening balance and closing balance.
If only 1 year and you need to do cash flow, it's possible.
No, 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 no. They won't give you like that because you need opening balance for cash flows.
No, I mean in general, like
In
if we,
general, see, cash flow is basically how much of the cash that has come inside and gone out of the company, right? So in order to
yeah,
know that, you need the opening balances as well. Clear? So
but
last
if
year's opening balance, last year's closing balance is this year's opening balance. That is the logic.
I have company new and only this year working, for example, if there is no previous year,
Then we'll prepare the cash flow statement next year. That's all. When we get the two balances.
then we don't do cash
No,
flow for 1 year,
no,
right?
no.
Mm-hmm.
Understood.
Okay.
Okay. So we'll stop here. And the second method we'll take